Any investor worth his dollar would know that he must consider all the pros and cons associated in his investment choices, gold included. Let's kick off with the advantages. The first is inflation hedge. Inflation often instills fear in the hearts of an investor because it will almost always affect the value of the money they have in the bank. As time goes on, the purchasing power of the dollar predictably declines. If you happen to get your hands on an old magazine, it may come as a shock to see how cheap the prices are in advertisements or the cost of the magazine itself. For example, in 1990, the average price of a house in the U.S. was $150,000. Fast forward 20 years later, and the average cost has gone up to $220,000 in 2010. Did the house actually appreciate, or did the value of the dollar fall? Let's look at the same house using the gold currency. In 1990, gold was selling on an average price of $383 per troy ounce. Should you want to purchase a house then, it would have taken 392 ounces of gold. Jump to 2010, where the average price of gold has risen to $1,118 per troy ounce. The house is worth $220,000 in 2010 and would only set you back by 197 ounces of gold. Gold's purchasing power remained stable over that 20-year period, but the value of the dollar took a downturn. In January 2005, the price of gold was pegged at roughly $435 per ounce. In December 2014, the price had gone up as high as $1,180 per ounce. If you compare that to the 24% inflation rate over the 10-year period in question, you can see that the ascent of gold prices is far greater than inflation rates. One of the primary attractions of gold as an investment option is the security of knowing that the price is going to rise steadily over time. Of course, historically, the price does dip from time to time, but it always goes back up. If we look at the historical charts for reference, we can safely conclude that the price of gold is almost certainly going to be higher 10 or 20 years from now. Unlike stocks, bonds, or mutual funds, you won't have to worry whether a particular industry or corporation is performing when you check the value of your gold investment. Although the current state of the economy has some effect on gold prices, a slumping economy does not automatically pull the gold prices down. Just the opposite, economic uncertainty drives more people to invest their money in gold, which in turn pushes the price upward. Physical gold and gold in general supply great portfolio diversification. Probably the biggest benefit of investing in gold is portfolio diversification. As we have mentioned, the price of gold performs very well in times of uncertainty. Therefore, a splendid way to balance the volatility and returns within your investment portfolio is to include gold in your lineup. Specifically, the inclusion of gold as a part of a diversified portfolio protects you against a wealth wipeout in extraordinary situations such as severe economic depression or stock market crashes. Another good thing is that investing in physical gold is not a difficult task. Let me put it straight. Investing in gold is surprisingly elementary, and newbies can learn how to do it quite fast even without much experience in money investment. If you talk to a broker or financial analyst, chances are you will hear more about the inconveniences of investing in gold. They are not likely to tell you how easy it is to buy gold for investment purposes. The truth of the matter is, there's no shortage of gold dealers around the United States, all happy to sell, whether in the form of jewelry, coins, or bullion bars. And when it comes to storing your gold, you need not worry or fear. A simple deposit box at your bank is sufficient to store your gold safely, securely, and conveniently. As you acquire more gold over the years, all you have to do is get more safe deposit boxes. Then your investment stays safe in the best way possible. The last benefit of physical gold is the ability to save your investments in case of financial disaster. Let's face it, any investor would have a fear about how their investment would turn out, but it seems this fear becomes less when it comes to gold investing. For instance, should the market crash that happened in 2008 recur, it would wipe out your investment portfolio if it was made up of only stocks, bonds, and mutual funds. But if someone put in a substantial portion of their long-term investment money in physical gold, he would probably be at peace. His investment will not be really adversely affected by a financial crisis or global market shutdown. In fact, the price of gold usually goes up during such situations because more people shift to physical investments as their faith in the financial market deteriorates. That's it for now. On our website, you can find more posts as well as calculators and other financial tools. Are you considering physical gold investment? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial education videos.